30th of March 2009, and here we are again presenting to you the Forexserve weekly update. This week we take a look at the markets like we do every week and try to figure out what could be the theme that would play out and what would be the dominant factor that we need to keep our eyes on. We have noticed over the last few weeks that the dollar has weakened like we had expected, but at the end of last week there was something that detracted from the course of events, and we saw the dollar strengthen and the euro tank, the GBP coming down, and the yen strengthened somewhat. Gold was on the sidelines, oil weakened, and of course there was element of risk again rising in the markets. So we've seen very much back and forth of this feature going on for some time, which is basically fear and periods of complacency. This week very much could be a week where the first part there would be some amount of fear arising out of the prospect of further losses in the US banks, which did indicate on Friday that some of them were not going to be as rosy as was expected just a few days ago. Losses in the automaking companies as well would continue to plague. But then on Friday, the US payroll data would be keenly watched for further evidence of the slowdown in the US. On the European side, the ECB is scheduled to meet on Thursday, and there is expectancy that they would cut the rate by 0.5%. But more than that, if they were to also resort, like the Federal Reserve Bank, in quantitative easing, as is called, it would also undermine the euro. But from the technical perspective, we feel that the move that was started a month ago could sustain, and the current dollar strength is merely a return to neckline, as one would call it, which would result in a consolidation phase and finally resumption of the dollar weakness. So by and large, we expect all the currencies to be within their set patterns, correcting for a while and then resuming the underlying trend which has been in place for some time now. In India, we of course feel that the rupee has been very much following the dictates of the global markets, and there could be a window of weakness which would be followed by some strength later in the second part of the week. And with that, we end today's commentary, and we shall see you again next week.
This week we start with the analysis of the pound, and we see how in the last 4 days, and today being the 4th day, that the pound is attacking the neckline of the triggered head and shoulder pattern, which we have been speaking about for some time. The question is whether it goes through, and in fact whether this is a triangle which is triggered and it's a downside move from here. While it may be so, but overall readings suggest across the board that the dollar should weaken, and we would side with the theory of the GBP going higher from here, and we'd like to see today's closing, in fact, and if we see a closing below 41 figure, it would become apparent that the neckline has been breached and possibly there is more downside to this move than we had thought. So we would say in summation that since the currency is becoming oversold here, and since there has been a clear breakout from the neckline and the major moving averages, we would think that the upside is more probable than the downside. Now we look at the euro now, and we see that the euro has also made a downside attempt, especially in the last 2 days, which includes today, and it might find some support at the 3 months moving average, and I think from there you might see it go up. And while we speak, we see also that the stochastics, which is a measure of the oversold condition here, also coming to a head. So in all, I think this is a healthy correction, and there's been a fairly decent move up, so it's correcting, and we would reckon anywhere between 30 and 32 it would base out. The other currencies like the Canadian dollar have also shown weakness against the dollar, and we see that the Canadian dollar has actually moved out from over the immediate 3 months moving average, and is heading towards the neckline, as it were, or the trend line, and I think it might base out there somewhere close to 126, 126.50 before coming lower again. Now a quick word on the rupee before we wrap up for this week. Rupee, as we can see, has also followed the global dictates. So if we were to look at this formation, and this could be the first wave down, second wave up, third, and the fourth wave up, and the chances are that this is some kind of a wedge formation that is taking place, which might break to the downside finally and head for the target region, as we have mentioned, somewhere between 49.50 and 50.10. Once again, thank you, good luck, and goodbye.